Hello and welcome to week number 7 of the weekly preview. This weekly video will be very short as there's just one or two things I want to explain as we are waiting some of the themes to play out. Starting off our analysis by having a look at the CFTC report, and we're seeing another long build up for the euro. So about 18th or 25th of November thereabouts, euro long started building their positions, and pretty much every week they've added, barring but maybe 1 or 2 weeks, and we continue to see the build up. Now currently sitting at 5.5 billion long contracts, or the net positioning is 5.5 billion long, and the open interest is a staggering 700k, which is quite interesting, seeing the way that EurUsd is trading is pretty much stuck at the same levels for the past 4 months. On the other hand, we had some reduction in short position on the pound, and that should create some upside pressure too. But moving to explain 1 or 2 moves last week, and then to see what we can expect. The chart you're looking at is 5-year inflation expectation, and if I were to compare this with AUD, JPY, and any other yen pair as well, you see that the correlations are running quite thick. That was one of the reasons why AUD, JPY, or all the other yen pairs did not touch down with the yield curve that I explained a couple of weeks ago. That will still take a bit of time to set in. In the near term, it seems to be following the hedging activities from the bond market in regards to what the inflation expectations are. On Friday, late Friday, we had some negative news regarding Ukraine and Russian border, and that kind of tanked the risk. But apart from that, it looks like AUD, JPY, and all the other yen pairs wants to touch back up where inflation expectations are lying. Overall, I think the 3% should be holding, and I can't really imagine this pushing beyond that. But in the meantime, you need to be careful to see how this pans out. I was actually short myself, AUD, JPY, and I had to get out of the position as I saw this climbing in, and then the news hit and things changed. But that's one dynamic to keep in mind as you are trading yen pairs. You'll be closely following this dynamic on inflation expectation. Another trade I was interested in and didn't really pan out just yet is EurUsd, and let me go back to the candle chart, which makes a bit more sense. So EurUsd, on the back of ECB pivot, we saw this candle creation, and I just showed the CFTC report. It's quite bullish. So basically, this entire period, there's been only mostly euro buyers, and they're not getting shaken out by any of these moves. So I'm really expecting some sort of a bullish reaction coming soon. The problem we have right now is that the Ukraine and the Russian border, there's a conflict building up that so far has not escalated yet, but it's continuing to be a pain for the market and makes really pricing really difficult, specifically if you're EurUsd bullet in this environment. Another reason why I'm thinking EurUsd should be moving higher, barring any all-out war in Europe, is the German spread. So we have the German spread here with the US, and you can see it's already moving back up. And as this moving back up, that tends to create a sort of a positive reaction for EurUsd. So I'm expecting EurUsd to eventually catch up with the yield differentials as well, and that should create some bullishness for EurUsd. Ideally, I would like to see EurUsd about 116, 117. Again, next week will be a little bit more difficult. There's 1 or 2 data points which you want to have a look at, which is the German ZEW sentiment coming on Tuesday. That could cause some bullishness for EurUsd. On the other hand as well, you will have on Wednesday we have FOMC, which is quite important. On the same day, we will have UK CPI readings as well, and I like to see what the reactions are. So there's going to be some important reactions for EurUsd on Wednesday, but also for GBPUSD, as we're going to see the CPI coming through. There's a really difficult dynamic right now in the UK where wages are increasing slower than what the inflation is, and the Bank of England will like to bring that down. And once we see really aggressive read on Wednesday, I can imagine there's going to be loads of volatility on the pound, and I'd like to explore that on that day. So it's a bit more wait and see next week, specifically because we have a few events that are unpredictable, one being the Russian-Ukraine escalation, and then also some of the data reads. But overall, the market is shaping up to give us some better directions as we are heading towards the end of February. That's all I wanted to cover this week. I wish you a successful week, and I will catch you again next weekend. Thank you. Bye.